technical front today. In the studio, we're being joined by Kunal Botra, and we also have Rajesh Agarwal, who's joining us on the show on the fundamental side. He's the head of research at AUM Capital. On that note, then, let's get kick-started with all the queries coming in, and lots of queries have already started trickling in. So let's take a look at which is our first query for the day. And Rajesh, let's start with you today. Our query is coming in from our viewer, Mr. Subrata Mukherjee, who's writing to us from Kolkata. He's asking if this is the right time to buy Natco Pharma for investment. Do you have coverage on Natco Pharma? What are you making of the overall pharma space right now? Given that we're very close to that 2nd April date for the tariffs to come into play, if at all. So what are you making of the space and Natco Pharma in particular?
Good morning, Benita. Good morning, Shreyanshi. Good morning, Kunal. You said it right. There is a sword hanging on us of the 2nd April tariff, but now this has become a part of the market, and everybody has digested the news that tariffs would be there. Uh, in fact, there are various kind of statement coming from Trump that sometimes he is saying that there would be some leniency on tariffs, sometimes there will be reciprocal traffic and all those things. And every day these news start pouring in. For a long-term investor, I think these are good opportunities to accumulate stocks, especially stocks like Natco Pharma, which is doing very well in oncology space, and the numbers have been decent, I would say, if not good. Margins are improving. They have good product pipeline going ahead, and the best part is they are moving ahead into oncology. That is one of the most sought about sector in the pharma space at this point of time. If somebody has a time horizon of 12 to 18 months, one can go long on this.
All right, then that's the take coming in as far as Natco Pharma then is concerned. The next one that we actually have is coming in from Ramamurthy, who's writing to us about a whole host of counters, Kunal. So he's looking at Reliance, he's looking at IndusInd Bank as well, HDFC and IDFC First Bank. What do you make of all of these counters?
Well, they are very strong in that sense. I think Reliance, IDFC First Bank, etc. I think many of the stocks are restarting their uptrend after this sharp correction in the last many months, and many of these stocks are now at multi-quarter, month levels on the downside in terms of support points. So I would believe that these are attractive mix. You can look to buy these stocks at current levels, but my only catch is that I am sensing that maybe the markets are a slight bit overbought on the hourly charts. You might probably see a few days of more consolidation which could pan out on the indices. So it's a good bet that you are looking at in terms of the stock composition, but maybe I think you can just about time it a little bit more better, even if you're looking at this from a short-term angle.
Okay, so that's the take on that stock. Let's move on. And Rajesh, once again coming to you, our viewer Bhuvan Ganesh is writing to us from Chennai, and he's asking for your view on Coal India, GAIL and ONGC. He wants to particularly hold all of these stocks from a dividend earning point of view. So on that note, and overall as well, fundamentally, what are you making of these three counters, Coal India, GAIL and ONGC?
Yeah, out of these three, if I have to give in picking order, I would say first one will be Coal India, second one will be ONGC, and the third one will be GAIL. All three are good stocks as far as dividend pay is concerned. Coal India being the best dividend yield is around 7 to 8% at this point of time. And they're the largest players in coal across the world, moving into solar also, renewable energy also. Moreover, with the kind of power shortage coming in coming months, we witness coal demand to go up. Valuations are extremely attractive, I would say, for Coal India. One can go long on this. As far as the ONGC is concerned, I think crude at $78-80 wouldn't be too good for ONGC in the short term, but for a longer term horizon, I think the valuations have become attractive. Dividend play is good. They have good reserves not only in India but internationally also. GAIL is another play on gas, I would say, the gas transfer and all. But that is more dependent on external factors rather than on purely on gas. So I would say in the pecking order, one can go long on all these three for a long-term horizon.
And that's a take coming in as far as Coal India, GAIL as well as ONGC are concerned. Kunal, I'm curious to know whether you concur with Rajesh in terms of the valuations that he's talked about when it comes to all three of these counters.
Yeah, largely because I believe, frankly, when I look at the charts over the last, 2 years, 2.5 odd years for Coal India, ONGC, etc., many of these stocks, they came out of almost 7-8 years of downtrend or sideways consolidation. And then, there was a flurry of price action for these stocks. In the last 6 months, you've seen almost like a 30% broad correction into these spaces. And I believe that with low beta stocks and such stocks going into such a kind of a sharp correction in a span of 6 months indicates that that could be a very strong buying opportunity from a long-term play. So my sense is that ONGC, Coal India, and probably if I can add few other names from the PSU pack, the likes of NTPC, etc., they could be potentially very good buys if you have a long-term time horizon.
Okay, so that's the chart, the technical take on Coal India, GAIL and ONGC as well. Rajesh, I'm going to come back to you because this next query is asking for a fundamental view. Our viewer, Mr. Sanjeev Sinha, is writing to us from Lucknow and he wants to purchase an automobile share. His choice is a better investment to make in, and yeah, fundamentally, what are these companies looking like, M&M or Hero? If he has to pick one, what would be your bet?
If I have to pick one out of these two, I would say M&M would be the better bet. Doing extremely well on both grounds, be it their vehicle or agrochemical space. And both are doing very good. Agriculture is doing well, tractor sales has gone up. In automobile, their cars have been taken very well, but Thar Rocks is in a huge demand, and the numbers have been pretty good. There have been some concerns in the recent past, and due to which the stock corrected heavily, but this is a good opportunity to go for long term. Out of these two, Mahindra and Mahindra is a better choice.
Let's slip into a very short break. Viewers, keep writing to us, keep those queries pouring in on that number that's flashing on top of your screen, and we'll address all of them once again on the other side of this very short break. Hi there, welcome back to Buy Now Sell Now. Viewers, thanks for writing to us with a lot of queries. We'll start addressing all of them once again. And Kunal, coming to you, the stock in question now is Jio Financial. This is something that we have been talking about for the last couple of weeks because a lot of people have been asking about this stock. Our viewer, we don't have the name, but they've entered this stock at 198 rupees per share and currently holds 2500 quantity. They're asking for a time frame for a 1 year period. And yeah, what are you making of Jio Financial on the charts?
I think, yeah, 190 is an excellent price if you bought, because I think it seems to be that that's the low for the stock and all-time low for the stock. Now, if you've bought at those levels, then I would believe that having a trailing stop loss could be a better strategy for Jio Finance. The concern for the stock right now is that it's still not broken past about the first previous major swing high, which is around the 242 mark for Jio Finance, even in this leg of uptrend for the stock, where many of the NBFC stroke financial services names, they start to look attractive and have given breakouts for themselves. So that's the concerning point. But the good part about the stock is that the volumes which have happened for the stock from that 200 levels to right now 225, 230 mark have been on the higher side. So it looks like that maybe the stock would take some bit of more time to consolidate and then move up higher. 240 is the breakout point for Jio Finance on the spot levels. So I believe post those levels, you could probably see a much more heightened momentum. Trailing stop loss mechanism is a better strategy if you were to ride the stock from a short to medium term play.
Alright, then that's a take coming in. As far as Jio Financial Services is concerned, tell you what, Rajesh, the next query that we have is actually coming in from Gautam, who's writing to us from Mumbai. Wants to know about the 500 shares of Adani Post that he's holding on to, and it's 1,200, that is his buy price. At this point, you do have Adani Post that's taking it on the chin as far as that particular counter is concerned. So what do you make of this one, 500 shares buy price 1,200?
Continue to hold, and if your funds allow, you can even add more. It's one of the largest ports in India, operating very well. They're one of the best play in logistics space. So I would say, with the way things are changing in the logistics space, I think it would give very good returns in the next 1 or 2 years. If your time horizon 12 to 18 months, you can even add.
Looking good on the charts, looking good fundamentally is Adani Ports, and add is the call coming in. Kunal, coming to you, our next viewer, we don't have the name unfortunately, but they have MCX at 6,217 rupees per share for the medium term. They've not specified what their holding is, but viewers, once again, please clarify how many shares you are holding, so it's easier for us to give you a view. But yes, MCX shares at 6,217 for the medium term. Viewers asking what should they do if you recommend to exit. Please suggest any stock that's looking good right now other than this. But yeah, what's the view on MCX, Kunal?
So yeah, my sense is that the stock would probably go back into a corrective phase. I think the major part of the rally from 4,500 for MCX is now done. The stock is still facing resistance. It's still into a downward trending mode. Unless the stock breaks past about the 5,700 mark, we would expect that the rallies would probably be facing a lot of resistance for MCX. I would suggest that say closer to 5500 mark, 55, 5600 is where you can consider booking out your positions for the stock. If you're looking to shift to some other stock, I'm not sure whether you're looking at the same space, but I would actually recommend from the defense space something like BEL, and potentially if HA also comes a bit lower.
Alright, then that's a take coming in as far as that particular counter is concerned. The next one that we actually have, Rajesh, is coming in from Sriram, who's writing to us about a couple of those power financier names, REC and PFC, often names that are taken together. Wants to know if the run could possibly continue. Should he be booking profits? Hasn't really mentioned his buy price or the quantity that he's holding on to, but REC and PFC, they've had a rough last 6 months. So what do you make of both of these counters?
See, last 6 months has been rough for everything, be it Reliance, be it REC, be it whatever. So that should not be the consideration. Depending on your time horizon, if you are ready to hold for a long period of time, by long I mean at least 12 to 18 months, one can continue to hold. They give out good dividends, the price to book value is good. Asset quality has improved in the recent past. And when we talk about power situation in our country, we feel there would be a huge shortage of power, and these companies are going to do well since they finance to the power sector as such. So everything is good in their favor, but depending on your time horizon, you should take a call. If you are a long-term investor, yes, you can continue to hold. And by any chance, it falls by 3, 4, 5% from the current levels, one can even add.
Okay, so that's the take coming in on PFC. Kunal, coming back to you, our viewer Mr. Mohan is writing to us from Hyderabad and holds Eicher Motors at 2,000 rupees per share. Once again, we don't have the holding. What is the horizon for 1 year? And Kunal, specific to you, this question is, so what are you spotting on the charts? What would be your target price with a time frame of 1 year for Eicher?
See, I would suggest to hold on to the stock now. I understand that Eicher Motors has not been one of the best performing names over the last 2 to 3 years, but right now what's happening is that the stock is going to a relative strength mode where it's been one of the class outperformers with respect to its other peers, whether it's of course from the two-wheeler categories or when you look at this broad-based across all the auto stocks. So that's a sign that market participants are expecting that Eicher Motors could be one of the better performers, at least from the auto pack. So I think it makes a lot of sense towards shifting towards or staying with Eicher Motors till the time the relative strength degree holds on for the stock. My sense is that over the next 12 months, assuming the markets become stable and there is lack of or less amount of volatility, you might probably be looking at least a 10 to 15% upside for the stock from current levels also.
Alright, then that's a take coming in as far as Eicher Motors then is concerned. The next one that we actually have is coming in from Manjula, who's writing to us from Chennai. Rajesh wants to know about the 40 shares of Nazara Technologies that they're holding on to. Buy price was 525 rupees. What do you make of this particular counter?
So one of the gaming companies which has been listed in India, they are growing inorganically and organically too. Balance sheet is strong, but the thing is the numbers have not been that good in the last 2-3 quarters, if I would have to say. At this point of time, I would say if somebody is thinking of buying, it's avoid, but somebody is holding, just wait for some upside to be there, maybe around 1,020, 1,030 odd levels, one can book profit.
That's the take on Nazara Tech. Kunal, coming to you, this query is coming in from our viewer Ruchi, who's writing to us from Andhra Pradesh, and this is a commodity query. He's asking at what price can he buy silver futures for a 3-month holding period. What are you making of the move that we've seen in silver recently? Because there was a time when we had seen silver go up very massively, then that cooled off, and now gold is doing that bit. So what's the take coming in on silver? And to his specific query, at what price would it be good for a 3-month holding period?
See, I don't track silver in terms of the futures prices, but broadly I would believe that both silver and gold, they would look very attractive when you look at this over the next say 6 months to 9 month capacity from here, and I'm looking at this from a December 2025 end. My belief is that say in rupee terms closer to 90 to 95,000 mark is a good range if you're looking to buy silver on the spot prices. As I said, I'm not sure the futures prices whether they trade in premium or not, but I believe that that's a good range where you can look out for if you're looking at this as a 6 to 9 month trade, because my sense is that both these commodities are now trying to come back into their strong support zones, whether you look at this gold in terms of the dollar denominated or in rupee terms, or whether you look at silver in terms of dollar denominated or rupee terms. I think both of these asset classes, they would start to look fairly attractive. So buy on dips maybe close to 95,000 mark as a broad range is what you can look out for.
Alright, then that's a take coming in as far as the precious metal space is concerned. Of course, you do have gold that is sparkling bright near that record high as well. That's the update coming in as far as gold is concerned. But the next query that we actually have, Rajesh, is coming in on a couple of these IT counters. Because you do have N. Ramesh who's writing to us about Coforge, wants to know if it's a good buy, at least for the long term. And we also have Jay Krishnan who wants to know if he can be purchasing Coforge or Persistent. Which one do you pick amongst the two of these counters?
See, both are a good buy for a long term. There have been concerns about IT being under pressure due to Trump tariffs and all those things. But I think with the kind of correction almost all these stocks have seen, the valuations have become somewhat attractive, provided you are ready for a long term. Out of these two, if I have to select one, I think Persistent is in a better place rather than Coforge. Although I would reiterate that both are a good company for long term. But out of these two, if I have to select one, Persistent would be the choice.
Okay, so that's the take coming in between both of the stocks. Persistent is better placed. But on that note, we'll slip into a very short break and keep it going with all your queries when we return, so don't go anywhere.
Welcome back. Still watching Buy Now, Sell Now on ET Now. Let's continue taking all of your stock-related queries. And the next one, Kunal, that we have is coming in from Siva, writing to us from Chennai. Wants to know about RCF. 12,000 shares. Buy price is 136 rupees per share. What do you make of this?
Yeah, you can hold on to the stock as of now. I think shorter term wise, I would probably expect that the stock would have made a decent retest of the major breakout point of 110 odd mark for RCF. From there, I think in 2024, the stock had done exceptionally well. Right now, I think it's come back to that closing that retracement. So I think at 120, 128 levels where it's trading right now, you can consider to hold on to the stock for a potential target, at least on the short term, close to 135 to 140 range.
Okay, so that's the take coming in on RCF. Rajesh, coming to you, we have our query coming in from our viewer K. Narayana Reddy, who's writing to us from Warangal, and he's a retired bank manager. He's asking about two shares. He owns 50 shares of Polycab at 5,560 rupees per share, and he holds 75 shares of BSE Limited at 4,333. What's the view on both of these stocks, Polycab and BSE, and would it now be a good time to continue to hold these stocks, or what is your recommendation when it comes to both BSE and Polycab?
See, Polycab, taking one by one, Polycab has seen a rough patch after a very grand performance for the past 4-5 years. I would say last 1 year has been very bad due to various reasons. BOPD prices have been gone. No, the last few quarters has been not that good. But going forward with the kind of uptick which we are witnessing in the housing sector as such, we think this company is going to do very well. So this is the right time to buy, I would say, at 5,000 odd levels. It's the target is around 6,500 in the next 18 months. So it's a buy from our side, almost 30% of price for the current market price. As far as BSE is concerned, we have been giving buy calls in the levels of 500 odd rupees, and it has touched 6,000 odd rupees. Right? Trading at 4,500, 600 odd rupees is a good buy from our side. Market cap of almost 40,000 odd crores, doing very well. No corporate governance issue. A debt-free company, cash positive. They have a huge cash in the balance sheet, 12% holding in CDSL, Gift City. Now they have Star Mutual Fund, the Star Mutual Fund app, which is doing very well. I think all parameters are in favor of BSE. It's a buy from our side.
That's a take coming in as far as that particular counter is concerned. Kunal, the next one that we have is coming in from Vivek, writing to us about KEI Industries. Wants to know about he's not mentioned the quantity, but he wants to know about the 3,000 rupee buy price that he's purchased this stock at. Wants to know if he can be holding on for the next 3 months. Now, when you take a look at the charts, the last 3 months have been painful for this particular counter.
Yeah, it's been painful, and it's been on the news flow, of course, because of the sector the stock has been. But it's a quality stock, and I think there would probably come a point when the stock would look very attractive. So far, on a quarterly basis, over the last 3 months, the stock has shed 35-36%, and it's come back to that 2023 mid, where the stock was almost at 2,800 mark or sub 2,800 levels. So price wise, I think it's come back towards an attractive point. Maybe another 2-3 months of a drift in the prices, what I would expect from the charts for KEI. The good part is that the volumes have started to rise up higher, the average volumes, and the price at least have stopped correcting very sharply, except for that odd bit of news flow which comes back time and again for the stock price. So which means that potentially over the next 1 to 3 months, higher chance that the stock may form a medium-term bottom for itself. So not a buy at current levels, but potentially watch the stock over the next 1 to 3 months. If the stock drifts lower and say comes back to levels of 2500 or 2700 range, that could be potentially a zone where you can look to accumulate.
Okay, so buy on dips is the call for KER on the 25-2700 range. That's the call from Kunal. Rajesh, coming to you. Next query is coming in from our viewer Vidya, who's writing to us from Bangalore. The stock in question is CG Power and Industrial Solutions. She's asking about your view on this company and if now would be a good time to buy this stock. She would like to hold this stock for 2 to 3 years. So from that time frame and that time horizon, what are you making of CG Power right now?
See, strong company. After you went to Murugappa Group, did very well. Phenomenal performance, I would say, in the last 2-3 years, and still looking strong. Fundamentals are strong. Company doing very well. Numbers have been improving. For long-term horizon, it's a buy. But at this point of time, I would say, wait for some more amount of correction. Maybe 580, 600 odd levels would be a better level to enter.
That's a take coming in as far as CG Power is concerned. Kunal, I'll come right back to you with the next one because we do have a couple of queries coming in as far as the banking pack is concerned. So we do have Vijay Lakshmi writing to us from Bengaluru, wants to know about IndusInd Bank 25 shares. Buy price is 1,100 rupees, and even other than that, in terms of the entire banking pack, we have Ashish who's writing to us about a time horizon of 1 week. Now that's a very interesting time horizon that he has in mind, but he wants to know if you have any counters in mind when it comes to this particular horizon.
So, is it related to IndusInd Bank only specifically, or the second?
So Ashish wants to know about the banking pack, and Vijay Lakshmi wants to know about IndusInd Bank 25 shares, 1,100.
Fair enough. So I think for IndusInd Bank, of course, we all know the kind of news flow the stock has been going over the last two to 3 weeks, and that's one of the reasons why you've seen the stock correcting. I've historically believed that when stocks go into such kind of an odd phase, when there is such a kind of a severe news flow, these stocks, they generally tend to drift lower or consolidate for at least a period of 1 to 3 months before you see any clarification or any positive data points emerging on the fundamental side for the stock. So, I would not suggest an average at current levels, but just watch out for the news flow. Whenever that starts to improve for the stock and the price action also starts to improve coherently, that's a zone where you can look to start maybe averaging out for IndusInd Bank. Now, coming to the broad names for the banking index, I would still believe that it makes a lot of sense to go with the winners or the strong performers in the private sector banking names, because a leader in terms of the price performance, they generally charge premium whenever the markets go into an odd phase of a correction as well as time consolidation. So my belief is that the likes of Kotak Bank, ICICI Bank, and even to a larger extent HDFC Bank, they could continue to outperform. So if you're looking at buying these stocks on dips, I think keep these 3 stocks. Any mild correction to 5 percentage points from their previous swing highs could be a good entry point.
Okay, so that's the take coming in on the large private sector banks. Rajesh, coming to you, our next query is coming in from our viewer Neha, who's writing to us from Bangalore. She's currently sitting on the 20% profit when it comes to Manappuram Finance. That's the stock in question. She's asking what should her next step be? Should she continue to hold? Should she buy more? Should she exit? Given, we've seen some volatility in Manappuram recently on the back of that Bain acquisition coming in, couple of block deals is what we've seen. Fundamentally, how is Manappuram looking to you? And just on a side note, if you had to pick between Manappuram and Muthoot, where would you place your bets?
See, these gold loan companies are doing well, and with gold and other solid metals making new highs, these companies are going to do well in the recent money in recent future. But I think the valuations are on a higher side, and after the Bain news, which we have seen in Manappuram, it has run up quite a lot. So a lot depends on how things pan out in the future. So if I have to choose something from gold loan financing company, I would go with quasi gold loan financing company like Federal Bank or a CSB, which are better placed than these two. So if I have to give my choice, it would be either CSB, that's Catholic Syrian Bank, or a Federal Bank.
That's a take coming in as far as Manappuram Finance is concerned. The next one that we have, Kunal, is coming in from Sunny, who's writing to us about holding on to a couple of counters that he can hold on to for the next 2 to 3 years. Now, the counters in question are Castrol India as well as HCC. What do you make of these 2 counters? Because he also wants to know if he can average these counters and what price levels would you then have in mind?
Yeah, so I think Castrol, you can look to average. I think the stock is coming closer to the 200-day moving average. If I'm not wrong, I think it's around 200 mark or thereabouts, for Castrol. So you can consider averaging out the stock, closer to that kind of a point whenever the stock hits those kind of 200-day moving average support. On the other hand, HCC, I would believe that say closer to 22 range could be a good support for the stock. But the concern with HCC is that the stock has been a huge underperformer, and even in this phase of a bounce back, it's not as if that the stock has come back towards its long-term averages or surpassed about those levels. So it's inherently a stock which is still not found its or ended its corrective phase or a downtrend. So maybe there could be a chance that HCC can underperform for some more time, but just in terms of price level, I think closer to 2022 could be a good point if you're looking to average.
Okay, that's the call coming in on HCC and the next levels to watch out for if you're interested to average. Hope that answers your query. But on that note, we'll slip into a very short break and keep it going with queries on the other side. So keep writing to us and we'll be right back. Hi there, welcome back to Buy Now, Sell Now. We have to address what's happening with the markets because what a steep fall we've seen. We're at the day's lowest point almost for the Nifty right now. It's rather flat right now, but 23,650 thereabouts. Remember, at one point we were as high as 23,860. So it's been slightly more than 210 point cut coming in from the day's highest point for the Nifty. So not looking good at all. Broader markets are also not doing anything at all in today's trade. In fact, they're tanking even more than the benchmarks. The 1.5% cut coming in on the mid-cap index, almost a 2% cut coming in on the small-cap index, and at the day's lowest point is where both of these indices are as well. Sensex has also slipped into the red right now. We've slipped once again below the 78,000 mark. India Wix up 3.5%. Nifty Bank also once again in the red. We're hovering around the 51,600 mark, but let's see if we can hold on to these levels. Big cuts coming in. IndusInd Bank has fallen slightly more. It's a 4.5% cut coming in. Dr. Reddy's, Hindalco, Adani Ports, Adani Enterprises, all of these are tanking in today's trading session, and that's what is causing pressure on the markets right now. But let's keep it going with all our queries, and Kunal, we'll come to you. Let's talk about Dr. Reddy's. Subrata Mukherjee is writing to us from Kolkata, and he has bought Dr. Reddy's. Once again, they've not mentioned how much they're holding, but their buy price was 1,210 rupees per share. He's bought it from an investment point of view, which means he wants to hold it for a decent amount of time. But what are you seeing for Dr. Reddy on the charts, and how is Dr. Reddy's looking to you?
See, I believe that the stock is still going through a corrective phase. So, the recent correction for Dr. Reddy from 1400 levels thereabouts towards 1100 mark, then a bounce towards 1200, and now getting back to a correction indicates that the trends have still not settled up for Dr. Reddy. And it's interesting because this comes at a point where the stock is also nearing the resistance line of the previous pattern for the stock. So earlier, from 2024 start, the stock had formed a bearish head and shoulder pattern. The neckline of this pattern is closer to the 1200 mark. So my belief is that till the time the stock doesn't close on weekly basis about the 1200 mark, say with a margin of 1%, 1220 to be precise, then you could be looking at the stock facing resistance. I would suggest that if you're looking to buy the stock, wait out for that weekly closing about 1220 mark. That could be a point where the stock may come back into a breakout mode. Otherwise, there could be a chance that the stock may underperform.
Alright, then that's a take coming in. As far as Dr. Reddy's Labs is concerned, Rajesh, I'll come to you with the next one because RK Ahuja is writing to us about Hero MotoCorp, wants to know, now we've discussed this counter briefly, but he wants to know if the 30 shares that he's purchased at a buy price of 4,800 rupees, should he be selling those and opting for L&T Finance, or for that matter Motilal Oswal, with a 2-year time frame in mind? So what do you make of all three of these counters from this lens?
See, as far as Hero Motor is concerned, it's no point selling this stock. It's not a bad company, I would say. We have just said that it would, my amendment would be a better choice than Hero Motor. But yes, Hero Motor is a good company. They are doing very well. New launches has been done. The only thing is the rural economy has not taken off very well in the recent past. But going forward, I think rural economy is going to do well, and that's the major market for Hero Motor. They have even moved into EV space and all. So things are good for this company. Continue to hold. As far as the LT Finance or Motilal Oswal Finance is concerned, these are stocks for short to medium term, not for a long term horizon at this point of time. Motilal Oswal, one can buy at this point of time for maybe a 5 to 6% upside from the current market price in the next 3 months or so. L&T Finance is a slow mover, I would say, doing very well. They have come out with a lot of underperforming sectors, I would say. But still, I think there are better choices in NBFC, maybe a Poonawalla or a Geo Finance, even Bajaj Finserv is a better choice when you talk of NBFCs.
Okay, so that's the take coming in on a bunch of those stocks and what our viewers should be doing next. Kunal, coming to you, our viewer Reshma Bhatia is writing to us and she wants your opinion on Hindustan Copper. She's got 150 shares and she's bought it yesterday, in fact, at 237. So she's asking about what your outlook is, and if we can quickly just get in Rajesh's view on the same as well. Kunal, you go first.
So I'm bullish on the commodity space, commodity stocks, and I think over the last few weeks rather, I think we've seen a very good pickup of price action for many of the names. Hindustan Copper, of course, the stock has started to move a bit more late, but I would still believe that the long-term charts are extremely attractive. I would suggest you hold on to the stock, especially with a time frame of 12 months to 18 months at least for these stocks.
Alright, and that's a take coming in as far as Hind Copper is concerned. That's a whole recommendation coming in from Kunal. With that, thank you so much, Rajesh, as well as Kunal, for joining us, answering all of those queries very patiently.
On that note, we'll wrap it up on this edition of Buy Now, Sell Now. Viewers, keep it going with your queries. We'll begin addressing them at 11 a.m. tomorrow. We'll wrap it up. It's a goodbye from Shreyansi, me and the team. But stay tuned to ET Now because Markets at Noon is up next.